We're going to be going through a broad market overview. We're going to be touching on the US stock market. Going to be going into individual stocks as well. I know we don't really focus on individual stocks, but there's a couple of good trade setups that I think look favorable for long trades. So we're going to watch those as well. Let's start on the S&P 500. So yes, we're still in kind of like a bearish trend. It's moving in waves. We have this 40-day bearish move, kind of a bullish move afterwards, a bearish move. But generally, the overall trend is still to the downside. All right. So we're in a bear market, but this kind of area is favoring a move to the upside over the next couple of weeks. Whether this is a market bottom is a good question. So the Fed is still yet to pivot. When the Fed has pivoted previously, it has resulted in a sell-off across equities initially. So generally, the market bottom takes place roughly 30 days after a Fed pivot. I think that's right. So the market doesn't rally straight away on a Fed pivot. It can still sell off sharply. So although there's kind of talks of a Fed pivot in the market at the moment, it doesn't necessarily mean the market will bottom just yet. But we'll play the cyclical trend. I actually am looking at the ASX. I just posted some analysis in Telegram. I'll just bring that across. So in Telegram, here we go. So Australian banks appear to be leading the charge to the upside. So we have CBA breaking out of this kind of pennant structure. Okay, so this could be an A, B, C correction, a 1, 2, and we're going up for a 3, 4, 5. Or it could be an A, B, C, and we're going down much deeper. But either way, CBA should be heading up into that kind of 108 to 112 to 116 range initially. With that in mind, the ASX is actually lagging behind CBA. So the ASX is yet to actually break out this pennant structure. It's probably being weighed down by commodities. Okay, they're still relatively low. But once commodities start picking up, the ASX should start following banks. Now remember, financial stocks, they tend to lead the market. So if financial stocks begin to rally, that generally means a bullish move in the market is going to follow through as well. So we are watching for a small pullback to go long. We have our bullish invalidation around 6417, but I am looking for a better entry on the ASX to go long as well. So if we go down to the 4-hourly chart, we do have this kind of pennant structure. I'll be looking for kind of longs on a move back down into 6652, or if we get a break above this resistance level, we can look to go long and set that as our stop loss. So if it does break that low, that's the most recent swing low, it should invalidate a bullish move in the market. So we can either go long on a break above 6821, or wait for a pullback down into that 6630 support level before considering going long again in the market. Okay, so we're going to stick with that kind of bullish thesis. That would also require a dollar weakness scenario, a US dollar weaker scenario. So I'm going to go through a couple of different scenarios on the US dollar index from the high. So this is the DXY. We are at a major trend line top, remember, on the weekly chart. So this is a tag of the rising channel structure. We can count a five wave decline initially, which is a good sign for a bearish reversal. We can count a 1, 2, 3, 4th wave triangle and a 5 down. We've then possibly had a 1, 2, 3, 4, 5 for an A, B, C for a B, then a 1, 2, 3, 4, 5 for a wave C, which means that could be a B wave top. So we either have a wave A, B, and we're coming down for wave C, down into this area, which will be bullish for equities, for cryptos, for commodities, or on the other side of the coin, there is also a possible bullish outlook as well. What I do want to kind of just highlight, there is a gap in the market here. So what I really kind of want to happen is a short-term bullish rally in here. So we have like an A, B, C. That would then be the wave 2 top, and then we can start looking to go short on the dollar index beneath this low in here. Okay, because that would then come down into a 1, A, B, C for a 2, 3, 4, 5 coming down. Now if we also take a look at the bullish side of the coin. This is quite a clear 5-wave structure to the upside. So we could have a 1, 2, 3, 4, 5 for a wave 1 up here, an A, B, C for a wave A, B, C for a wave B, and then 5 waves down in here for a wave C. So that could be a wave 2, and then we're heading much, much higher. I did post this chart in Telegram as well yesterday. So I don't really have all the answers just yet. Okay, so this is the bullish scenario as well. We don't have all the answers just yet, but what we can kind of wait for is a break in structure. So we can either wait for a break of this low in here, which is 1148, or we can wait for a break above this high in here, 112.50. So either way, we can play the trade either way. But with our bullish outlook in the stock market, we're leaning towards a bearish DXY. Okay, so that should be positive for our silver trade. It should be positive for the EURUSD. It should be positive for the AUDUSD as well. So we touch on the AUDUSD initially. One thing that I don't like is, we do have this kind of classic bear flag structure. So similar kind of scenario occurred over here, and then obviously we broke down. We do have obviously that kind of classic bear flag structure, but on the bullish side, we've had a breakout of this negative trend line. So that is a bullish reversal signal. Market price action has come back down. It's now retesting the broken trend line. So really, to kind of consider any long trades, we need to see a break above 0.64. That would give us the green light to start looking at long trades. Similar kind of scenario on the EURUSD as well. So I'm looking at this potential trade on the EURUSD. If we take a look, on the bullish side, similar to the DXY, we've had a 1, 2, 3, 4th wave triangle and a 5. So that's 5 waves in there. So that could be a wave 1. The only issue is this decline in here is also 5 waves, really. It looks quite obvious as a 5-wave decline. You could probably go an A, B, C for a wave B, and then down for 5 waves. So an A, B, C. Bit iffy. I'm not quite sure just yet. And we also can have a 5-wave rally in here as well, an A, B, C down. So I'm kind of looking for a breakout above this resistance level to consider going long. We'll be looking at 1.0370 for the extension target on the EURUSD. It's teasing a breakout from this negative channel. So if we look at all of the, if we look at the weekly charts, we have had a inverted hammer, a doji candle, and a bullish candle. We're now breaking out of this negative trend line as well. So that's a bullish reversal signal. We go to the indicators, RSI, bullish divergence, stochastics is also moving higher as well. So again, bullish signals as well. So for me, this does look like a buying opportunity on the EURUSD, AUDUSD as well. So that's why we're leaning with a bearish dollar index scenario. So we've got the currencies kind of not mapped out, but we've got a theory in mind or a trade setup that we're looking to play over the next couple of weeks. It's not going to be just a straight decline on the DXY, so that's going to take a bit of time to come down, and we could be looking at 2 or 3 weeks, especially if we consider the 40-day bullish cycle on the S&P500. So we're also taking a look at Meta, so Facebook stock. What I kind of want to highlight here on the weekly time frame is this really looks like a completed 5-wave decline. Okay, so we have a wave 1, A, B, C for wave 2, a 1, 2, 3, A, B, C, D, E for wave 4, down for wave 3, wave 5, sorry, of wave 3, and A, B, C for wave 4, 1, 2, 3, 4, 5 down in wave 5. So we're either coming to the end of that trend or we are at the end of that trend. So what we're also looking for is possible long trades on Facebook or Meta and also Google. So we can start to go long above this top, or if we also have kind of like a bull flag structure in here or a breakout of that negative trend line, that may give us an opportunity to go long as well. So Meta is on our watch list for a long trade. Rather than trading, for those of you that are more comfortable investing, this may be a good area to actually invest in the stock market anyway for a long-term position. So Meta could be a good long-term hold at this level. If we take a look across, there's a major support zone around here at 126. So this could also be a good long-term opportunity to buy into Meta at a, what is that? At a 66% discount. So, long-term wise, that actually looks like a good investment. Similar to Meta, we also have Google, which is following a very similar kind of path. We can count a very clear completed 5-wave decline. So we have a wave 1, A, B, C for 2, down for 3, A, B, C for 4, down for 5. So that to me also looks like a completed initial decline of wave A. So we may get a larger bear market rally in here. So that's a 1, 2, 3, 4, 5 for wave A. Then an A, B, C for wave B. Then again a 1, 2, 3, 4, 5 up for wave C in here as well. So Google actually looks a bit more promising than Facebook at the moment. So I'm waiting for confirmation to post a trade. It's obviously just a bit tricky with the US market and timing on focus markets. Okay, so if we look at the 4-hourly chart, we've had a 1, 2, 1, 2. We should be heading much higher. So I didn't quite like the entry there. I'm going to be looking at possibly entering on this top at 103.52. We'll need to use that as our stop loss, the most recent swing low at 97.05. That is a 6% stop loss. And then obviously we can let that run. That would be your initial target around 111, and there might be an opportunity to take that higher depending on market conditions, but obviously we're short-term traders, so we can look to target 111 initially. Risk to reward isn't amazing on that one, but there is an opportunity to take that much higher into this wave 4 high at 122. Okay, so that's Google, Meta, the dollar index, the S&P500, the ASX, the EURUSD, the AUDUSD, and we'll just touch on the VIX. So the VIX is obviously going to let us know when volatility is increasing. When we get a breakout of a negative trend, generally the stock market pulls back. Everyone was watching for a breakout on the VIX over the last couple of weeks. That hasn't happened. This is bang on the bottom of the stock market. We're now getting downside pressure on the VIX. So this would also suggest that the stock market is due for a corrective rally, whether that's a bear market rally or a bottom in the stock market. So you're going to see price action compress inside this pennant formation. Of course, once the VIX does rip above this, there's going to be all hell in the stock market. When that does occur, it is yet to be seen. So we're expecting a bit more downside on the VIX. We've had a lower high on the VIX in here as well, which is a bullish signal for the stock market. When that does obviously break out, you don't want to be invested at all. You want to be pretty much all in cash. So we're going to play the bullish theme, guys. If you've got any questions about the analysis in the webinar, please reach out in the community in the trading floor. If not, I'll be trying to get some trades good to go moving into the second half of this week. Cheers for now, and we'll speak soon.